So Akash, the big story for the year 2012 has been we've seen a massive P expansion in FMCG and pharma names. What to your mind could be the big story for next 12 months?
Next 12 months. Well, it's a tough one. I mean, we don't look at sectors, as you know. We tend to be more on stock. I think there's a couple of themes. I think digitization we are playing. I mean, we think that's a very significant thing which has happened in India. Most markets have found it very difficult to digitize. India actually, to the extent the 4 metros are, at least 3 metros are reasonably done. Chennai, I think, will happen as well. And the current, I think the new Minister of Information Broadcasting has clearly said that he's not going to pull back from the the March deadline for phase 2 and then the remaining deadlines in middle of next year and beginning of 2014. I think that's a massive story in terms of that's a fundamental paradigm shift for the whole media industry. I think it significantly improves revenues for broadcasters at very limited cost. So I think that's a big theme. You can play various stocks in that. You can play cable, you can play DTH, you can play the broadcasters. We've chosen to play through certain broadcasters. I think that's a very significant long-term 2-3 year type of game-changing industry structure change. I think, and media as a whole we like. Also, I think media, is in my view, is a sector which will do well next year. If you believe the economy is stabilizing and partly accelerating, I think ad spend will come back. India ad spend to GDP is at a very, very low level. I mean, the total advertising spend in India is less than $6 billion, which is actually an absurd figure if you think about it. For a country of India's size, only $6 billion is total ad spend on any media of all types. So I think that's a big long-term theme. Otherwise, other thing we're playing is that we think the rupee, is going to remain around these levels. We don't believe rupee goes to 50 or below that. So I think, companies which have a significantly improved profitability with rupees around 54, 55, I think there's a lot of stocks like that. I think those stocks will do very well because market, I don't think, is yet believing that rupee will remain at these levels. A lot of people are still trying to say that X company, is making, say, 20 rupees earning per share this year, but at 50 rupees to the dollar only makes 15, so I'm going to value it at 15. I think 15 is not coming back for the rupee in my at least opinion. I think the 54, 55 is the new normal for the rupee, and you've got to, and it will stick. And I think a lot of companies' profitability is is much better than people think if you start plugging those numbers in and assume that's real.
Give me an example to illustrate that point.
Well, if you look at a stock, I will take example of Mindtree. I mean, it's a small mid-cap IT company. They should do 80 to 85 rupees earning per share this year. The stock is 650, 660, 8 times. Margins are organically will expand next year. And I think people, it's a 30% ROE business, free cash flow positive, good entrepreneurs have restructured the company. It should grow at 15 to 20% earnings for the next 2 to 3 years. Top line of at least 15%. Stock is less than 8 times. So, I think it's at 8 times is because people don't believe the earnings. And people believe that it's doing 80, 85 rupees earning this year because rupee has gone to 54 or whatever it is. And at 50, it'll do, 65 or 70 rupees. So I think there are a lot of stocks like that, which if you believe that 54, 55 is the new norm for the rupee, are very cheap and will do very well.
Are you betting on the bombed out pockets, commodities, real estate? If the cyclical trade makes a comeback, maybe commodities and real estate also could bounce back?
Well, commodities, I think, commodities we don't really play that much. Even real estate we don't really play because my views on real estate. I find real estate a very difficult sector to analyze. There are some pockets of value in real estate. We own one real estate company called Mahindra Life Spaces. We've owned that for a long time. We think that's a very good management team. Anita was the CEO, is a very top quality CEO, clean balance sheet, very transparent. So we know that company. We like that on the real estate side. Otherwise, real estate we find it difficult to. The stuff which is big cap liquid we find very difficult to analyze, and there are some smaller real estate companies which are very specific market focused like Bangalore or which are good companies but very difficult to buy, illiquid, so we don't tend to play there. Commodities we are not playing. I think there are a lot of stocks you can play which have economic sensitivity, which you don't have to go down into weak balance sheet situations. I mean, people assume that if I want to play beta, I have to buy some infrastructure, bombed out infrastructure company with a 3:1 debt equity and very impaired balance sheet structure. I think you can play economic sensitivity in many other ways. You can play through media, you can play through banks, you can play through manufacturing. There are lots of ways to play economic sensitivity. You can play through autos. You don't necessarily need to go into weak balance sheets or poor governance to play economic sensitivity.
Are you Delighted and surprised with the Bajaj Auto. The stock is at an all-time high. Even
well, it's an okay stock this year. It's not been a great stock this year. It's up, I think it's up 18 or 20%, so slightly lagging the market. So it's okay this year. No, I think Bajaj, yeah, it's been a great home run. It's been a 10 bagger for us over the last 3 or 4 years. So it's worked very well. No, we still like it. We still own Bajaj. We have tremendous regard and respect for Rajiv Bajaj. I think he's done an absolutely outstanding job. It's a phenomenal margin structure, phenomenal return on invested capital, outstanding business model. And I think he's still in the early stages of building out a global business. I mean, he's got more than $1 billion of export. There are very few manufacturing companies in India with that type of export and margin structure. He still, if you talk to him, he himself says he only has 15-20%, less than 20% market share of the addressable market internationally. He wants to, he wants to get that to at least 30-40%. I think this is a 3 to 5 year story where they will continue doing well domestically, even with Honda's entry. I think they're less exposed than Hero to Honda coming back. I think they will, they've got some new products coming in the domestic market. They could gain some share, maybe marginally domestically. But I think the real story there is international, and the real story there is on the potential entry into commercial vehicles with the RE60. We'll see how that plays out. They've done a great job in three-wheelers. People don't realize they've come from nowhere in the diesel three-wheeler market. They've really hit Piaggio head-on there and gained significant share in diesel three-wheelers. They still dominate the LPG and alternative fuel three-wheeler market. So it's a very diversified revenue stream: exports, spare parts, three-wheelers, domestic two-wheelers. We really like the company. We think over the next 2 to 3 years will do very well. And the stock is not very expensive. It's 13-14 times next year for an outstanding business with very high returns on capital and good management.
Akash, you've always maintained that in the near term, what influences market is sentiment. In the medium term, it is liquidity, but in the long term, it is earnings. So where, to your mind, there is strong earning visibility for next 2 years?
Yeah, no, I think because short term there's limited visibility because it's tough to the next 6 to 12 months what happens. Earnings difficult to say. But what I can say is that obviously earnings in India will accelerate next year over this year. I think this year, financial year March 13 will have earnings growth of 8 to 10%. That will accelerate for the coming year ending March 14 to at least 12 to 15% minimum. But I think what is, in my opinion, true in India, that there's a lot of companies have a lot of operating leverage. If you look at, there are many companies in India where earnings have not grown at all in the last couple of years. So take the example of two-wheelers, right? Or take the example of, let's take the example of even cars. Last 2 years, car demand has been grown at 4-5%. If you take a 15-year average, car demand in India has grown at 15%. So when sentiment comes back, you will have 1 year of 25% growth in car demand, and you'll have massive operating leverage, very strong earnings growth for corporate India when that happens. So I think those sectors which have economic sensitivity, I think there is significant operating leverage there, whether it be light manufacturing, automobiles, even things to do with capital goods and stuff like that, because they have cut costs and they've had very limited top line growth the last couple of years. So if the economy accelerates to 6.5-7% economic growth again, and you have things like car demand coming back, two-wheeler demand coming back, capital goods spending coming back, these guys will show 25-30% earnings growth because they have cut their fixed costs quite significantly. So I think you will have a significant positive earnings surprise sometime in the next 12 to 18 months or 2 years, because when economy accelerates, a lot of companies will do much better than people think.
Akash, the consensus opinion on D Street is that private banks are fairly priced. They are in fact priced to perfection. PSU banks are beaten down, and the NPA concerns have been ballooned out of proportion. What are your thoughts there?
No, I think that's partly true in the sense that private banks are very expensive. There's no doubt on that. I mean, mostly, like if you look at HDFC Bank or some other banks, so a couple like ICICI Bank, I could argue, are not that expensive. But yes, private banks have done very well, are expensive. PSU banks are on paper, price to book look far lower. I think the two issues I have with PSU banks, one of course is the massive capital shortfall. An article I wrote last week saying that there's a massive capital cliff coming for the PSU banks. They need to raise something like $40 billion of capital or $35 billion of capital over the next 3 to 4 years. The government doesn't seem to be in any mood to politically bring their stake down below 51%. So it looks a little difficult to where will the PSU banks get the capital that they require. And some of the smaller PSU banks need to raise the capital they require is equal to the current market cap which is kind of difficult to imagine them being able to raise. So I think some of the weaker PSU banks will have an issue that they will either have to merge with the stronger PSU banks or not be able to grow earnings loan book at all because they won't have the capital. The stronger PSU banks like the state banks of India will obviously be able to raise capital. They're good franchises. I think the issue there has been, of course, the people's concern around on asset quality. I think the PSU bank asset quality has turned out to be far inferior than private sector banks, at least year to date or last 2 years to date. And there is still, in my opinion, a lot of opaqueness around the way the Indian banking system accounts for its asset quality. There's a lot of rampant rumors and talks about evergreening and stuff like that. And the Reserve Bank also, at times, I think, has had no choice but to soften the norms of how you provide for assets or bad debts or how you recognize bad debts. I think the asset quality is there is concern around asset quality among the PSU banks. However, if people get more comfortable on the economy, they get more comfortable on economic growth, if the economy revives and markets revive, people will stop worrying about asset quality. People will get less nervous about it because if companies can raise equity capital, they can delever their balance sheets, asset quality will automatically improve. If the government can improve the investment climate, automatically a lot of projects which are not doing well, which are stuck, will get started. So asset quality to a certain extent will improve with better markets as well. So I think PSU banks, there is a trade there because they are cheap on paper and people will get less nervous on the asset quality issues as the economy and markets improve. But I do believe the coming capital raising requirements of PSU banks is a big issue longer term, which will prevent this from being more than just a trade. There's a clear trade in the PSU banks, but I don't think it's a long-term 2-3 year secular story.
So apart from IndusInd Bank, where are you picking your spots in the financial space?
We own IndusInd Bank, we own Cholamandalam Investment and Finance, we own ICICI Bank. So we like all three for different reasons, which I don't, I mean, all three have done well this year. All three are good managements. I think all three will continue doing well.
How are you picking your spots in pharma? Because you have exposure to Lupin, and that stock has run rather well this year.
Yeah, you know my entire portfolio looks like. No, Lupin has done well. We continue to like it. We have tremendous regard for Nilesh and Vinita and Kamal Sharma, of course. Great management team. I think Lupin we are still very excited over the next 2 to 3 years. I think their earnings and top line will accelerate. They've got a great return on invested capital. They generate free cash. So we like that stock. We're looking at a couple of other stocks in pharma, which we haven't bought them yet. We're working on a couple of names. But our core long-term holding in pharma, which we remain very positive on, is Lupin. We've not gone beyond that in terms of another core holding in pharma.
Fair point. So what is Akash Prakash's big call for 2013?
My big call, I think we've gone through almost every stock in my portfolio, so there's not much left to talk about. But I think, as I said, that there's a reasonable chance that it'll be a good environment for stock picking calendar 2013, because I think the government will deliver a reasonable amount of what people are expecting. I think the broad market gets capped because of a huge amount of equity issuance. But if you are in good quality companies which don't need to raise capital to grow, which have operating leverage, and which are and which have sensitivity to a weak rupee or will benefit from a weak rupee environment, I think you can do reasonably well in calendar 2013.
Akash, Gordon Gekko once famously said that every man on Wall Street is chasing a number. So you're a great writer, a smart fund manager, an avid traveler, and a big explorer. So what are you exploring for the year 2013?
What am I exploring? No, I am trying to find, I don't know what I'm exploring. I think nothing really new. I just think that, we've had 5 years in India where in dollars the market has delivered almost zero. I think we're getting to a stage now where people had almost given up on the country. I think we have a real chance to shine if we can deliver what we promise. And I think that hopefully 2030 will mark a line in the sand where India starts becoming relevant again to a lot of investors and global policymakers, and that we can regain some of the luster that we've lost in the last 2 to 3 years.
Ash, we'll leave it there. Thank you for your robust, solid and good insights, and good luck for the year 2013.
Thanks a lot, Nikunj. Pleasure as always. Thank you.